update. So, few things to get through, and very, very packed week this week for the market. So let's just have a quick look at the calendar to start with and see what we've got and what's important. Now, all of these numbers are on the will be posted on the Telegram channel as well. But I will talk you through them here. So let me get to this. Okay, so we start on Monday. Now, sorry, a very notable thing here is that just because a number isn't forecast effectively to kind of like be significant on the Telegram calendar, it doesn't mean that it's not going to be significant. It just means that the numbers that I've tested have the highest um, probability of going in a certain direction. So if it's neutral, it doesn't mean that it won't move the market. It just means that there's no kind of clear direction one way or the other. So when you look down the list here, if we're looking at things like PPI from Switzerland and even economic forecasts, these are likely to be market movers, but there's no kind of clarity on when they are released, which direction they tend to push the market in. And that could be, due to a number of factors. I mean, some of the numbers that come out appear relatively um, um, skewed. So you might sort of like, you might see that higher trade balance actually weakens certain currencies. Now that could be because it genuinely sort of is an inflationary outlook, or it could be because of, it's released at a certain time of the week, along with other numbers that those numbers take precedence. So it's possible. So you just got to be careful when you look at these numbers. So PPI will have some kind of directional movement potentially, but it's not kind of listed as one of the ones that we can really highly predict. Where we do get a number like that is when we look at the CPI data from Canada. Now, core CPI, if it comes out at around about the same, then so if it's at 0.6, that's got a very sort of that's got a bearish tilt, the core CPI. And when we look at the CPI data is bearish across the board, but particularly bearish if it's flat. So if this doesn't move at all at 2.2, so if inflation isn't coming up or down, it tends to weaken the currency. So right across the board, Canada tends to be weak on CPI data. So we can use that to our advantage and say, okay, if we get a setup long on the Canadian dollar, then we probably shouldn't be taking it on Monday. Whether if we get a setup short, then maybe that's still worth it. But there are other things this week that are much more significant in the market. And as we go down, we see on Tuesday the manufacturing numbers from Australia will be significant, but not anywhere near as important as the ones from Japan. So ones from Japan, when they come out, they tend to be bearish, interestingly, if they rise. And this is what I was saying about things being skewed. If manufacturing numbers come out from Japan and they climb, then they tend to be bearish. If they fall, they tend to be bullish. Now, if there is an extreme, so really what this is testing is if there is a slight rise, from 48.7 up to, anywhere up to like 49.5 would be fine. Then that would be thought of as bearish. Now that could be because of global influences, but if there's a drop, it tends to be bullish. Now that again could be down to global influences because if if Japan is a kind of bellwether for manufacturing and their manufacturing levels are lowering, that would suggest globally that there is a bit of a problem in the manufacturing sector, and that would push countries like the United States or Australia to have to lower interest rates to kind of boost the global kind of picture. So it's a really good proxy for what's going on globally. So we're looking at manufacturing rising being bearish and manufacturing falling being bullish for the yen. Services PMI doesn't pay too much of a factor. Then we look at these average earnings. Now, all these numbers on here. Well, you can put your own calendar up later. It's on the when I post the Telegram calendar, the Singapore times of these releases will be on there, so you can have a look at the Singapore times. Um, the next number we need to look at is these average earnings from the United Kingdom. Where is it? Um, Average earnings here from the United Kingdom. And they are also bearish if they rise and relatively bullish if they're flat or if they fall. Now, if you think about inflation, it can have a different kind of drive depending on where the market sentiment is. So hyperinflation, these numbers go up. It's bullish for the currency because it would suggest that the interest rate will have to continue to rise. But if these numbers go up when there's less inflation, that means that the pound or the currency buys less because there is inflation. And if the central bank is not going to move interest rates because of it being relatively under control, that means the currency actually sort of buys less. So the currency purchasing power decreases. So a rise in the average earnings is actually bearish for the pound, but a fall is bullish because that would increase the currency purchasing power. The unemployment rate is bearish, of course, if it rises, but interestingly, it's going to be bearish if it falls at this particular stage as well. So that already kind of points to the potential for the pound to be weak, because no matter how the number falls, there is a decline in the currency. Now we need to be careful because there is an interest rate decision from the United Kingdom on Thursday. So these numbers might just push the market briefly and then settle down again. So really, when you're looking at interest rates, the way I would look at interest rates and the announcements, I would sort of think, well, that's probably the main driver of the week. So that could change trend or it could continue trend. But you might be able to take advantage of some small intraday movements. And that's what these numbers probably are going to give you. Intraday movements, maybe just to start with, maybe it goes even further. What's this fireflies thing that keeps coming up? I don't think you need this. I don't think you need these fireflies. This is pre-recorded anyway. Um, we get rid of that, Sam? I don't know whether this is being cleared. Not that I mind, Angela, about this fireflies thing, but unless it's being cleared by the guys, we should probably get rid of it. Um, but clear it with James, and if James and Paul say it's okay, I don't mind it being there, but we probably should clear it first because I don't really know what it is. So yeah, so unemployment. Then we go down to the Euro manufacturing and services PMI, both of them um, bearish actually, right across the board for services, particularly bearish if it's flat, and manufacturing PMIs are also bearish. So we're sort of looking at maybe the pound and maybe the euro being relatively weak, certainly at the start of the week. We could look at selling opportunities for the pound and the euro right up until the end of Tuesday, possibly going into Wednesday as well. And then we have manufacturing data from the United Kingdom, which is also pretty bearish if there's a rise, pretty bearish. Flat, if it's flat, it's a bit bearish, and if there is a fall, then it's neutral. But just because of where it is, because it's around this 50 mark, it's not particularly expansive. The ZEW economic sentiment as well is bullish, interestingly, if this goes up. So if you are in a position on the euro, now you've only got an hour between the Eurozone PMIs and the ZEW economic sentiment. So there might not be long enough, but so in that case, my advice would be wait for the sentiment to come out. And if the sentiment is if there is a rise in sentiment, because that pushes kind of things down the road. So PMIs are consequential. PMI is kind of dropping. I mean, they do have a longer term kind of influence, but when you come down to sentiment, economic sentiment, that's got a kind of like predictive aspect to what's going to happen in the economy in future times. So if there's a rise in sentiment, that would tend to push the currency higher. Anything else is relatively neutral. Now, big numbers from the United States. and the big number is the unemployment number. So all of these you can look at. Building permits tends to be a bit of a market mover, but considering where it is, there's 1.34 million. It's not quite as significant. So all of these numbers will be significant, non-farm payrolls, all of them. But the big number to focus on is unemployment. And if unemployment is flat, if it remains at 4.4 and no movement in the US economy, that tends to be bearish for the US dollar. Everything else is relatively benign and neutral. Um, then we come into Wednesday. Wednesday, the big number is trade balance from the Japanese from Japan. And again, if it's an extreme, then we're going to have to recalibrate. But if it is just slightly bearish, sorry, slight rise, slight fall, or neutral. So if it is a rise in trade balance, again, that's bearish for the yen, and that's back to the same philosophy or the same kind of thinking with the manufacturing numbers. A rise in trade balance suggests a buoyant global economy, which means that people aren't quite as interested. Potentially, I mean, this is obviously kind of projecting a potential reason, but nobody really knows the reason for any of this stuff. But if we can think about what the reason could be, then we could think that if trade balance rises in Japan, that tends to be a boost for the global economy, meaning that you don't need the risk of currency like the yen. Now that is conjecture, but I don't care about why. I care about what tends to happen when the number releases, and that is fact. What tends to happen, what tends to happen. I mean, I can't say it's not binary, but it is a probability, and the probability is if the trade balance numbers are higher, the yen will tend to weaken. If the trade balance numbers are if they fall, it tends to be a little bit soft for the yen as well. But if they're flat, it tends to be neutral. So we need to consider that. Then we have the CPI numbers from the United Kingdom, and these are bearish if they're flat. Everything else is relatively neutral in its particular area. So we got 3.6%. If that falls a little bit, that won't be that significant. If it falls a lot, change of scene, that's going to change, but it's going to need to get well under 3% because we're nowhere near 2.2% in this country. 3.6% is way too high. If it's flat and remains kind of sticky, that's going to be bearish. That's going to have a bearish outlook for the United Kingdom. Same for the Eurozone. CPI data from the Eurozone is another important one. If there's a fall in CPI, that actually tends to be bullish because of where it is, 2.2%. If there's a drop, then that increases the purchasing power of the euro. If it's flat, it tends to be a bit bearish. If it's a little rise, it's relatively neutral. So these numbers could push things around, but where we really start to kind of get things that are of huge interest is the interest rate decisions. And the interest rate decision from the Bank of England is predicted to be at 3.75%. Now, that in itself could create some pressure on the pound because this is released on Thursday and the forecasts are for these to be weaker. Now, if the other numbers come into line, if the other numbers suggest that we should be bearish the pound, this will potentially kind of like push us through and possibly then we could create a longer term trend. So you could look at holding maybe the pound. If the earlier numbers are weak, that might be something that could be held on to. If this does come in at 3.75, if they leave it unchanged, that thing's going to flip fast. So you've got to be kind of careful, but you could certainly anticipate some weakness from the pound. But be careful not to get too close when you take your trade to the price on that release because you're likely to get jerked around and stopped out, and then it would have been the case that you'd have been better off waiting instead of trading it. Then interest rates from the Eurozone, a rise is bullish. When it's flat, it's going to be neutral, and if it was a drop, it would probably be a little bit bearish. But they're predicting it to be flat. They're not always right, by the way, but certainly with interest rates, they're right more often than they're wrong. CPI data from the United States is a big factor. And that is going to be bullish if it's higher, bearish if it's lower, and probably neutral if it's flat. And then we go into Friday and we see trade balance from New Zealand is a driver. Bullish if there's a rise, bearish if there's a fall. and neutral if it's flat. And that's kind of this is a risk-on currency. So it's the flip of what happens to the Japanese yen. If this does go up, that suggests global growth. If it goes down, it suggests global contraction. So this one is in line with the um, the the connection. So if a rise in the number, rise in the currency, lower number, lower in the currency. Consumer confidence from United Kingdom. This is, by this time it's going to be sort of well and truly on its way. But if that comes in at minus 19 again, that tends to be a bit bullish. So we might see a bit of a reversal if the pound has tanked into the interest rate decision. Then we get trade balance from Switzerland. Where's that? Maybe we don't get trade, but maybe it's interest rates from Japan, do we? Where's my Japanese interest rates? Yeah, here we go. Interest rates from Japan. I thought there was a trade balance from Switzerland, but maybe I was wrong about that. I'll look at that again. I'll look at that again. Trade balance from New Zealand, consumer confidence from the UK, and then monetary policy. Now, this could be massive. It really could be a big one because there was some intimation from the Bank of Japan that the interest rates were too low. So that could really push this one. This one really could actually flip around and start kind of going in the opposite direction. So that could put the Japanese yen in a bullish environment for the week. But you have to be careful when you take those trades because the other significant releases from the other countries might just kind of like flip the market back and forth before we kind of get to Friday. But I can tell you that going into the month, the yen is relatively strong. It's one of the strongest currencies, and I'll tell you what it's strong against. So we have strength for the yen on a monthly basis against all but the Kiwi. So the Kiwi tends to be another one that is strong this week. The Kiwi, the Aussie, and the yen tend to be strong this week, which is counterintuitive in many respects. That's the word I was looking for before. Then the current account from the Eurozone kind of finishes things up. These PCE prices will be important. Now, as I said before, even University of Michigan, as I said before, it's not that these numbers don't have significance. It's just that they're a lot harder to predict which direction they're going to push the market in. So even you can test where they are with certain levels, but it doesn't tell us enough to be able to kind of trade those numbers. So I just I don't bother with those numbers. I just kind of focus on the ones that give me a higher probability of a certain direction if they move within up, down, or flat. Current account is bullish if it's a drop. If it is flat or a rise, it tends to be neutral. So that could give a nice little kind of kick right towards the end of the week. Now, if we are looking for bearish pound and bullish yen, then we could look at the euro yen. Now, sorry, the pound yen. Now, my advice is now look at this. So the outlook is short, but we don't know when it goes into next week. You're going to have to watch this because this weekly pivot is going to step up. So you don't have a wave rider trade here. But what you do potentially have is an intraday trade. So this is where you need to kind of go through your list of strategies and say, okay, well, I might not get a daily position. I might get a daily position on the pound, and we'll look at some other potential options. But if I'm going to be trading like something like the pound yen, then I need an intraday position. It's not good to hold the yen overnight really because of the swaps, what it charges you on swap. But if you can get an intraday position, you can look into it. Now I'd be going down the currencies, the time frames, and I'd say, okay, well, what do I have straight away? I've got a trend line along here. This is a 4-hour chart now, so I've gone down from the daily. I've got a 4-hour chart, and I've got this trend line. Now this would suggest that because of the bias from the pound, as long as those numbers come out weak, or this happens before, that's no problem at all either. So if we sort of like saw, let me make this a bit thicker. If we saw something over the few days that kind of takes us down, and then is unable to get back above that trend line, and closes below, that would be a potential position to sort of like trade it lower. Now, if that kind of comes into line with the numbers, it's much better. Some of the numbers might not move the market early because of the interest rate decision, but if we get this, then we can take a position short, and what we could be thinking then is if there's an interest rate decision and price is down here, then you've got something to manage. But if price doesn't do that, if price ends up sort of around here before the interest rate decision, my sort of like thinking would be, well, if I leave stops up here, it actually could sort of flip around and everything kind of like go in the opposite direction. So I'd be taking some profit there and maybe letting a little bit run to see if I can get anything down. And then we could go down to see where this could come to. I mean, there's support there. So it might not be that far, but if it's broken through this trend line, but much greater chance of kind of coming down to the next area of support. And you know, you could start going through your longer term time frames and saying the weekly's there. So at 206.17, there's another one there at 203.43. So in and around, so let's say 206.20 and 203.50 might be a potential target for the pound yen if the numbers kind of allow us to kind of trade that. Now that won't necessarily be the best. Let's have a look at the best currency this week, and the best currency this week is the Swissy, interestingly. So historically, when I say the best, I mean seasonally, the best currency is the Swissy. So if we look at the pound Swiss on the weekly has already given us an indication that this could weaken. So better than the yen, better than the yen. I mean, the yen sort of like comes to the fore because of that interest rate decision on Friday. But this one might be better than the yen. So let's have a look at this on the dailies. Dailies, this is still in an uptrend. There's a low, higher high, higher low, higher high. This is still in an uptrend. So again, I'll be going down my time frames and seeing where there is a trend line, and I can see that there is something here, and it's been held up. So what also could emerge is a head and shoulders. So we could be looking at this doing something like this, giving us the left shoulder there. There's the head coming up and giving us a right shoulder. Now, if the right shoulder is on the trend line, that's going to be better. So we could be looking at this. Now, it might sort of seem that this is all, you know, kind of this could happen, this could happen, whatever could happen. But you might notice that my bias is to sell the pound. So that's the significant thing here. I'm looking to short the pound. I just need a reason to get in. Now, if I get a head and shoulders there, then I'll be quite happy to take that and maybe take that down to the monthly pivot. So that might be it. And if it gets down there before the interest rate decision, then I would just leave the interest rate decision do its thing. You know, I'll take most of the money off, leave it do its thing, and then see what happens. And it might end up in a downtrend. But then you have to be careful of the consumer confidence numbers on Friday. It might flip it around again. So my bias is bearish to pound. So I'm just trying to sort of pair it up with something. I like the potential of the yen, not technically, not chart wise, but I like the possibility that the market starts to think if the Bank of Japan raise interest rates, the yen is going to go higher. It's going to be more valuable. So I like the thought that you know the yen could come into play as a bullish currency this week. I like the thought that the pound is probably the best bearish one. Now, I always kind of like approach the week with an idea, but as the week progresses, you look at those numbers that I've indicated and see what they ended up being. If you are part of the Telegram channel, these numbers will be on your Telegram list. You can have a look at the calendar. If you are not, watch the video back and make a note of all the numbers that you need to make a note of, would be my suggestion. So yeah, so looking at weakness for the pound, so quite happy to look at it against the Swissy or against the yen. I quite like it against the Kiwi. The problem for the Kiwi, the problem the Kiwis had is that there have been setups down here. You look down here. There have been setup after setup after setup. Now this isn't this might not be a wave rider. Let's bring in a wave rider. It is wave rider. Look at that. There's a setup there. It didn't even trigger in. But there was a setup before it. There's a setup before it. There are a lot of bearish bars, but none of them triggered. It made a higher high, a higher low every single time. So really, for this to kind of get any kind of traction, it's got to break these levels. Now, I still like it on an intraday basis. I still think that we're probably coming back down to the lower end of the pattern, but breaking through looks like it's going to be much more dependent on those numbers kind of like falling in a certain way. So I will leave you um, with the thought that the pound is the one that I am looking to short this week. Seasonally, it's the weakest. The dollars were one of the strongest. The Swiss is one of the strongest. So they're the best seasonally. Um, the dollars, the dollar might be a problem because of CPI data. Swissy less so because the number happens earlier on. So the Swissy, the pound Swiss short is kind of like really high on my list. I quite like the idea of a pound yen short, but you got to be very careful with the yen. Shorting the yen is sorry, going long on the yen is can be a tricky task, but I quite like it. The weakest currency is the pound. The second weakest currency is the Kiwi. So that might even put this one off track. But looking at longer term, the yen does actually sort of start finding traction throughout the month. And that's a good thing because if the yen finds traction throughout the month, maybe we wait till Friday before looking at the pound yen as a potential trade short. And if those interest rates do go up, then we can take that trade and be comfortable that it's probably going to run for a while. If the interest rates are flat, maybe all those ideas are out the window. So I'm approaching the market with ideas, but you've got to be adaptable. And the best way to be adaptable is look at intraday trades, take profit in the right places, at first and first resistance, first support, and then allow yourself the money on the table to let things run, but manage it properly. Okay. Have a great week, guys. I hope this has helped you. Rewatch the video if there's a lot of information and you need to digest a little bit more. Go back and watch the video again. Absolutely fine to do that. But be prepared. That's the biggest thing. I'm prepared for this week, and being prepared for the week has brought me to the pound. Incidentally, the weakest currency going into the week is the Aussie, and the Australian seasonality tends to strengthen against the pound and the Kiwi, but nothing else. So the Aussie does tend to it is kind of coming into the week with lower fundamentals. It's probably the weakest coming into the week. The yen is actually one of the strongest coming into the week. So that's something else to consider. So strongest coming into the week with a potential interest rate announcement that could raise the interest rate, or certainly some sort of monetary policy. That is very, very good. That's bullish signs for the yen. Just got to be careful when you go long on the yen because of the cost. All right. Well, enjoy the week, guys. I hope it's a fruitful